Jim and Laura, they are both 65 from Washington. They say, we've saved a lot of money, but we keep hearing about how inflation eats up our savings. How in the world do you protect yourself from that?
One of the ways to keep pace with inflation, according to Warren Buffett, is don't lose any money.
Rule number one,
Rule
don't
number
lose
one,
money.
don't lose any money. Because losing money puts you far behind.
Yeah.
Right? People go, well, I invest in the market to keep pace with inflation. Really? You just lost 25%. How does that inflation plan look like right now? Right? Now, we know we need to use the market, but we need to use it smartly.
Right.
This is why we choose to bucket our clients' money, right? Because it's just a better approach than just keeping it all in one account, hoping that the market cooperates all of the time. But if you look at every dollar that you take from your retirement account, right? Let's take this $100 bill, for example. And let's just say that this is your monthly withdrawal. Okay. And this is coming from your IRA, your 401k, your 403b.
Haven't paid taxes on it yet.
This is money that you got a tax deduction, right? So it came off your taxes.
Okay.
Went into your retirement account.
That's growing.
Tax deferred. And now when the money comes out, now we've got a tax problem. And this is going to count as ordinary income. And it's going to be taxed at whatever your tax bracket is.
Okay.
So let's just take a look at how far a $100 bill really goes. Well, the first thing is, you mentioned it, inflation, right? So you take a little piece off for inflation, right? And then, of course, that money's coming out. So the next thing we need to do is we need to pay taxes, which is a larger sum that needs to go to the IRS. Then you need to pay your bills. Okay. Then some of you may have children that say, Mom, Dad, I need a little extra money, right? That little extra money, here it is. And then this is what you have left over to spend and live your retirement. And this is why tax planning is so important. This is why understanding the rules of retirement accounts is so critical. People make so many mistakes when it comes to just the simple IRA account. You know, Rebecca, I remember reading an article in Money Magazine. A gentleman by the name of John Barron had inherited his father's 401k account. Not knowing anything about how inheritance works on 401ks and IRAs, he got a call from the company saying that he was a sole beneficiary to his father's $500,000 retirement account. They said, we're going to send you out the death claim paperwork. You need to fill it out and you need to send it back to us. So he fills it out, sends it back, and they send him a check for $500,000. He puts it in the bank. He thinks everything's done and over with. A few weeks later, he gets a 1099 in the mail for $500,000.
Oh, as income.
1099 counts as ordinary income. That's correct. Why? Because the minute that money came out of his dad's 401k, it counted all as ordinary income to him. So now that $500,000 comes out, on top of it, he's in his peak earning years. So he's earning $150,000. So now he's going to pay ordinary income tax on $650,000. The article went on to say that the son wound up writing the IRS a check for over $255,000.
Wow.
That's half of his dad's retirement account wiped out in taxation alone. For a long time, I was part of a group called the Elite IRA Advisor Group through Ed Slott. Ed Slott is one of the most sought after CPAs in the country. And he says one of your best defenses against decimation of taxation on your retirement accounts and your estate is life insurance. And too many people are too cheap to write that check to protect that money. You see, you can have, let's say, $1 million in retirement accounts, okay? And you can build a strategy to where a little bit of money comes out of those retirement accounts to give you the money that you need to live off of. But then you can also take a little bit of that money and buy a $1 million life insurance policy. When you die, rather than leaving your IRA to your children that is 100% taxable, the IRA pays to the children 100% tax free.
The insurance.
The insurance policy. This is how you create wealth. This is the strategies that if you're working with one of those box firms, you're not going to hear these things.
Right.
These kids at these box firms are not trained on these advanced techniques. Look, I was not either. So I don't want to act like I'm up on some pedestal and I was smart from day one. Look, this took 25, 30 years of me learning and talking to thousands of people to finally get the strategies and techniques down that maximize and optimize your money for your specific situation. I got into the financial industry because my mom and dad had a Montgomery Ward's catalog store, right? And mobile gas came in. This was during the 1980s when we had the corporate raiders, and they would come in, they would raid these corporations,
Terrible.
tear them down, sell off all the assets. My dad lost that store. And so my parents were in financial hardship for a long time. And as a child, you'll never forget that.
It's very stressful.
Very stressful. You can feel that financial stress through the walls at night when you're trying to sleep and you hear your mom and dad arguing about things. And my dad's working 3-4 jobs to put food on the table because we don't have insurance. None of that. And I got into the business because I felt like, how can you prevent something like this from happening? And so I thought financial planning was the most logical thing until I got into the financial planning industry and realized it was just a bunch of used car salesmen, right? And they were like, they literally pointed to a cabinet and said, hey kid, there's all of our mutual fund brochures. Just read those, learn those, and then go out to people, talk to them about the performance of those accounts, and then let them know that you can do a better job for them than somebody else. No proof of it, right? No mathematical calculations like we do today on Excel spreadsheets or anything along those lines. Everything we do for you at Secure Money Advisors, we will prove to you with the numbers. You will never, ever get some BS hypothetical report from us. Most of you are getting these BS hypothetical reports that are meaningless. They mean nothing. Pie charts, line graphs, bar charts. They're garbage, folks. They're garbage. Money comes in, money goes out. It's very simple. It's done on an Excel spreadsheet. That's why so many people tell me every single year, why has nobody ever shown me this? If I would have known this 10 years ago, my life would have been better, and I want your life to be better. So call 1-888-382-1298, schedule your complimentary retirement session, or go to onthemoneyoffer.com and get a copy of your book. Go to onthemoneyoffer.com right now or call 888-382-1298 to schedule your complimentary retirement session.